prices are shooting up, investors are buzzing, and your uncle who still hoards silver coins in Ziploc bags suddenly thinks he's Warren Buffett. But here's the real question. And more importantly, is this just another hype cycle? Or are we watching something much bigger unfold? So, gold is back in the headlines. Again, why now? What happens next? Let's break it down. As of July 2025, gold is trading above $2,400 per ounce. That's not just high, it's Taylor Swift ticket resale high. Back in 2020, gold was around $1,700, and even then, people said it was expensive. But now, it's blown past that old ceiling and is casually living in the penthouse. So what's driving it? Spoiler, it's not astrology. It's a perfect storm of factors, and it starts with one of the oldest power moves in finance. Central banks stacking gold like it's Costco toilet paper in 2020. Remember that? According to the World Gold Council, central banks bought over 1,000 metric tons of gold in 2023. That's the second highest total ever recorded, just slightly below panic mode. And they're not doing it for fun. We're talking China, Russia, Turkey, India, the geopolitical power crew. They're reducing exposure to the US dollar because, let's face it, the dollar has been giving off midlife crisis energy lately. Why gold? Because it's neutral. It doesn't care about sanctions, SWIFT bans, or late-night tweets from world leaders. It's outside of politics. It doesn't default. It doesn't lie. It just sits there, quiet, heavy, and smug. For these countries, gold isn't an investment, it's an exit strategy. Now let's talk about what really gets people sprinting toward gold like it's the last life jacket on the Titanic. Fear. Inflation's still lingering, like that one guy who won't leave the party even though the music stopped an hour ago. Yes, it's cooled down since the 2022 chaos, but it's still eating into your money. Rent, groceries, services, they're not coming back down. So when your cash is slowly losing value, gold becomes that friend who never flakes. Now mix in some geopolitical spice. The Russia-Ukraine war? Still dragging on. Tensions in the Middle East? Simmering like a bad subplot in a soap opera. US and China? Still beefing like it's season 4 of a Netflix rivalry nobody asked for. When the world feels like it's being held together with duct tape and vibes, investors don't want exciting. They want safe. And for centuries, gold has been the panic room of the financial system. Let's not forget about the elephant in the room wearing a "Help, I'm $36 trillion in debt" t-shirt. The US government. Yeah, the national debt just crossed $36 trillion. At this point, the only thing growing faster than US debt is the price of Beyoncé concert tickets. Interest payments are now rivaling military and healthcare spending. And that freaks people out. Because when the world's biggest economy looks like it needs a GoFundMe page, investors look for non-stupid places to put their money. Gold? Still looking like the adult in the room. And then there's the Fed. They've paused rate hikes for now, but nobody really believes it's over. Markets are watching Jerome Powell like he's trying to defuse a bomb with sweaty hands. If you don't know who that is, you definitely need to check out one of my recent videos on this guy. Nevertheless, if the Fed cuts rates sooner than expected, that's another tailwind for gold. Because gold doesn't pay interest, but when interest rates drop, suddenly not earning a yield isn't such a disadvantage anymore. It actually becomes a strength. Real yields fall, and gold looks better by comparison. Now hold on a second. You might be thinking, wasn't Bitcoin supposed to be the new gold? People were shouting from the rooftops, gold is for boomers. Bitcoin is the future. And then came 2022, 2023, and, well, reality. And to be fair, Bitcoin has come a long way. It's become more accepted, more institutional investors are in the game, and countries like El Salvador even made it legal tender. Cool story. But when the global economy really panics, no one's calling their crypto wallet. They're calling their vault guy. Gold doesn't crash 30% overnight because a billionaire tweeted something dumb. It doesn't need electricity. It's physical. You can hold it in your hand and it doesn't vanish in a rug pull. That's why central banks are buying gold, not Dogecoin. So, where's this headed? Some analysts think we'll hit $2,500 by the end of the year. Others are calling for $3,000 in 2026, especially if recession fears return, or if the Fed pivots hard toward easing. But let's slow down. Gold doesn't climb in a straight line. It moonwalks, rallies, pullbacks, repeat. The real takeaway? Gold isn't about hype. It's about the symptoms. Inflation, instability, geopolitical drama. When those rise, so does gold. Now here's a twist you might not see coming. Tokenized gold. Yeah, we're talking about gold 2.0. Digitally wrapped and blockchain-backed. Platforms like Paxos and TetherGold let you own gold digitally, with real bars sitting in real vaults. It's attracting a new crowd. People who like the idea of gold, but also like the idea of not tripping airport security with bullion in their backpack. So here's the real question. Should you buy gold? Look, I'm not your financial advisor. I don't know your portfolio. Maybe you're a crypto daijin, an art collector, or maybe you're hoarding Pokemon cards. But here's what I can tell you. Gold isn't supposed to make you rich. It's supposed to stop you from getting poor. It doesn't moon, it doesn't crash. It just holds the line. When the world melts down, gold calmly sips its tea. So how do you get in? You've got three main options. Go old school, physical bars, and coins. Great if you like shiny things and have a good hiding spot. Go Wall Street. Gold ETFs like GLD, liquid, simple, touch-free. Go digital, tokenized gold. Crypto with a golden soul. Interesting space to watch. Bottom line, gold isn't a flex. It's a financial seatbelt. You don't wear it because you plan to crash. You wear it because you might. And when everyone else is panicking, you're calm, cool, and maybe just a little smug. If you found this breakdown helpful, give it a thumbs up, subscribe for more sharp takes, and drop a comment. Do you think gold's just getting started? Or is this another shiny distraction? And if you want smarter investing insights without the noise, join my free newsletter and get practical tips, tools, and strategies straight to your inbox. No fluff, just value. Link in the description below. Don't miss out. Stay smart, stay curious, and maybe buy a little gold before your barber starts recommending it.